Good morning, guys. Good afternoon. Thank you so much for being here in another video, another episode. This is Edward from Team Profits. Today, we're going to be doing some Q&A, a couple of questions that I asked you guys on my Telegram group. And I recommend you, if you're new to this channel, stay until the end. These questions are going to be answered. And, it might help you as well to get out of, some doubts, to get clear some doubts. And let's go ahead and just start right away with what happened. Let's see here. The first question right there is, let me take a look. Like basically, like how to analyze Forex charts. Was that pretty much the first question? Well, that's a big question, like in overall, because, Forex, it depends on your strategy, how you're going to be, for example, let me hide this. How you're going to be entering the market and how to analyze is basically the main thing that you need to know. Like I always tell you guys, is basically price action. Price action is the main thing of everything, and if you have a strategy, you have to know price action, basically for that to work. If you're thinking that an indicator will tell you where the price is going to be going and you will be living off of just an indicator, no, that's not going to work. So main thing here in this business is price action. Okay, price action, like watching the market, watching where the market is going. And of course, a couple of things that will go with that. Of course, some strategies will work differently. For example, I'm on gold right now. So if I have a strategy for gold, it's not going to work the same as if I'm using it on a currency. Okay, because the price moves differently. So it's totally different. The same as with maybe with the Nasdaq, or between gold and Nasdaq, it's totally different. However, price action is always the same. So that's why if you have a strategy with some indicators, and you want to use it, for example, also one of the questions in there was if you can use these strategies like the TP strategy or the diamond strategy in currencies as well. Like, I think the question was right here, was one of the last questions. This one was the last question, actually. Can you use the same strategy for both index and currency pairs? And the answer to that one right quick is the diamond strategy. No, the diamond strategy is only for index. So it would be for Nasdaq, US 30 or US 500. Okay, the diamond strategy. Why? Because it's basically, or mainly, we are waiting for the time for the market to open, which is at 8:30 a.m. in South America, and 3:30 p.m. South Africa. Okay, so that's why I called it the diamond strategy. The TP strategy, however, you can use it anywhere you want. You can use it even if you want in currencies and Bitcoin, cryptos, index, on gold as well. If you want, the TP strategy would work. Okay, if I was able to answer that. Okay, so it would definitely work. So coming back to the first question right there, which is huge, showing how to analyze. So it's basically, price action. Let me go and activate this. Like, for example, on gold, we're seeing the price, from this double bottom right here. You have to know and learn the type of patterns as well that are out there, and the more common patterns that happens like all the time, that repeats. Double tops or double bottoms in this case. This is double top right here. This right here goes this. This right here, so double top. This right here was a double top. Beautiful double top. Okay, those are very common patterns. This is a double bottom in this case, right? And you know that whenever it looks like there is a double bottom, you can be looking for entries right here at this point. I'm going to tell you how to look at entry right there and how it looked when the prices started to push up. We go on the 30 minutes right there. So this was pretty much the actual double bottom right there. Okay. So the prices started to create high highs. Like it was creating first this type of triangle right there. The price came down. It finally touched the last low, which was on the previous bottom right there. And then you started to see that the price, starting to create engulfing candles and pushing up, even breaking this high right here. So you have to be aware of the highs, previous highs, which was right here. The price was, if you think about it, and if you see it from a close perspective, it looks also like some type of head and shoulder pattern. So you're starting to see more and more patterns as you maybe, go in. Let me see, head and shoulders here. So it looks like something, let's say something like this. It's not a perfect pattern, not always going to be perfect or beautiful, but some sort of like that. It looks like some type of head and shoulder. Here's the first shoulder. The head is higher, is lower than this shoulder, right? And then the next shoulder, it created actually a lower high. Okay, so pretty much similar to this last high right here, last low, I'm sorry. So it is some type of head and shoulder. And as well, if you're looking to buy at this point, what I usually do is I draw my line from the last high at this moment. If there's some type of consolidation as well, because if there's some type of box, you can see it as well, some type of box or consolidation, in this case, head and shoulder. And you will be looking for buys as soon as the price breaks above this last high right here. Okay. Right. So you will be looking at there. Now, I think there's another question in there, like where would you put your stop loss? So usually if I go in there, after the breakout, I'm on a 30-minute, of course, I should be going on a 15-minute, 5-minute for the entry. Let's suppose we got the entry right there. As soon as the structure is broken, we go in right there, and the stop loss usually is below the last low. Okay, if you're going on a buy. Right there. Where was the last low? This was the last low, not this one right here. If you want, like it depends on your account, of course. If you want, you can also put it below that last low, but that would be too much. To me personally, that would be too much. Usually, correct way to do it on price action is below a couple of pips, maybe below that last low, just to prevent, because it's creating, higher low, and then this push, you see this big doji right here, this is starting to push. This was also a signal. You see, this is a candle pattern now. This right here, this bearish candle, then you have a doji, and then you have a bullish candle right there, almost the same size or even a little bit bigger. This is a nice pattern. This is a reversal pattern when we talk about candles. This is a candle pattern. So this was telling us, okay, price keeps pushing up, okay, on a 30-minute, of course. This is how it's looking on a 30-minute. Now, you would have waited still for the breakout of the last high of this structure. There was some type of, the price tried to break above, and it didn't. It came down again. It touched it again. It didn't. A little doji, and then boom, this was the candle that broke above. So entry right here, stop loss right here. Now, the take profit, it depends on you. If you want to do a 1-to-1 risk to reward, if you want to do a 1-to-2 risk to reward, what I personally do with gold in this case, because remember, everything is different. The price action is pretty much the same on every pair, but particularly on gold, even though price action is the same, your take profits are tend to be a little bit more, difficult, complicated to do it. But I would be aiming for this thing right here. Usually, whenever there's some type of pattern like this, I go either for 1 to 2 risk to reward, or I will aim for the next structure. Okay, when was the last high or the next structure, very strong structure? Some point it looks like there was some type of resistance right here. Okay, so I could be aiming that point, and you guys know me that I don't like to hold trades for that long. Usually on gold I do, because yeah, I know gold how it moves. So I usually tend to hold my entries on gold a little bit more. On pairs, you know, I don't like to hold them for that much. You know, if you have that patience, you can do it. But this is how I would do it. You know, I would do the entry right there, knowing that this was the second touch. You know, it looks like it was doing a double bottom. Beautiful opportunity of entry right there, and boom, price pushed up immediately. Now you can see from here, you can see the difference. Even if I go like this, you can see the different patterns all the way. From here, you can see a lot of patterns that are happening. Like very different, like when the price is pushing down, than when it's pushing up. I'm gonna grab this tool right here, and I will draw the patterns that I see. So basically, there is some type of consolidation right here. Was some type of flag pattern. This is a continuation pattern. And if I zoom in, I mean, you can see clearly continuation patterns everywhere. And on a very small time frames, if you go on a 15-minute, 5-minute, you will see a very clear, much clearer than on a 30-minute. Of course, you're going to be seeing a much clearer pattern right there. That's another pattern right here. You know, the price broke the structure right here on following price action. The price broke, came down to do a retest, and then it did another, it looks like a double bottom as well. It looks like a double bottom, double touch. And then boom, started to push up again. And then you start seeing patterns all the way up, some type of triangle patterns, which is some type of like this. It happens as well. This type of patterns happens a lot on gold. You can see patterns everywhere. Whenever the price is pushing up, you will be seeing continuation patterns this way, like this. Now, you see the difference. Like the price is pushing up and it's doing pullback. Push up, pullback, push up, pullback, push up, and then little pullbacks, you know, mini pullbacks. Now, when the price is either dropping, the patterns kind of change. Is the inverse. But what you see here is the inverse. So you may be seeing something like this. Now this is an inverse triangle. Then where was the triangle? Well, this is some type of triangle right here. But you see how it works. You see push and then start creating a triangle this way. Now like this, this is when it's pushing up, when the momentum is bullish. Now when it's pushing down, it creates this inverted triangle. So it's push and then start consolidating and then breaks down. Okay. So, of course, there's a lot of consolidation here, but depends. Let me see. You will see patterns everywhere. And that's gonna come naturally. You know, you need to just practice and see. You will be seeing these type of patterns. These also right here, when the price goes and is exhausting, when the market is exhausted, like this big push up, you may be seeing something like that as well. You may be seeing there's another head and shoulder right here. It happens a lot. There's another head and shoulder right here when the market is exhausted. So it's repeating over and over again. Head and shoulder patterns in gold are happening all the time. Pushing up. When the price keeps pushing up, you know, it's creating sometimes bigger patterns, sometimes, you know, small trends, consolidations, patterns keep pushing. You know, this is a consolidation area right there, small patterns right there. You know, it will happen all the time. I keep looking, there was some type of ugly consolidation here, but if you zoom in on a 15-minute or 5-minute, you actually will be seeing some patterns as well. Again, maybe some triangle pattern right here, right? And you got a flag pattern. You got another small flag pattern right here if you zoom in. So it's happening all the time. These are signals that the price is pushing up. So what you need to do, where are you going to be looking? Every time you see a pattern like that, where are you going to be looking for an entry? As soon as you see a breakout. Simple as that. Following price action, you're going to find an entry whenever you see a breakout of that little flag or a structure. If the price is, is pushing up, and then not the market is not going to be pushing up the whole time, because otherwise, everybody will be rich. The price has to do pullbacks. The price has to return and correct, make a correction. So let's suppose we're right here, where let's say, I saw this movement, then came back. It looks like we was doing a retest of the structure. Then I would have get in, I don't know, maybe there. Let's say I would get in there. Where am I going to be putting the stop loss? You can put it below the last low or even below this low right here. Okay, that's a good position. And where are you going to be aiming? You can aim 1 to 2. Okay, if you want to go safer, you want to just get in and out right quick, you can just go 1 to 2. Okay, same thing here. Small pattern. Of course, I'm on a 30-minute. Let's say you wanted to get in there, on a breakout. I'm pretty sure on a 5-minute it was looking better. Stop loss usually below that last low, a couple of bits below that last low. You want to go for a 1-to-1. And in here, this is where, this is just following price action. Like, I'm not using indicators. I'm not using anything. Okay, you can just go safer with 1 to 2. Okay, now this is where and why I decided to start to implement my indicators on my trading strategy, because the indicators that I use, they help me find out when should I be getting out. Okay, if I'm trading this way, when should I be getting out of the trend? Because I got out here and I was like, oh shit. The price kept going up. I'm so stupid. Why would I get out here? I should have held it for a little bit longer and I would have made double or triple, So that's why my indicator, for example, at least this one here, the WMA, it will tell me. Of course, it's not going to tell me anything now because I'm on a 30-minute. And let's see. Let me put this thing. I don't want to get lost. I'm going to put the line here. Let me go maybe 5 minutes. I'm gonna go with 5 minutes. Of course, I'm gonna have to go back. I'm not sure if it's gonna let me go that far. Let's see. I don't think it's gonna let me. Hold on. Okay, 5 minutes. This is not good. Not good at all. All right, that's what I want. Okay. All right, sorry for that, guys. Let me just, I hope it will let me, because it's 5 minute time frame. No, it's not gonna let me. You see, Trading View is not gonna let me go back that further with 5 minutes. It's something because of the time. I'm gonna have to do it on 15 minutes. Let's see if it works. Okay, looks like on 15 minutes it is working. All right, I'm able to go back here. Okay. So, all right, yeah, here we go. It does work. It looks like on a 15-minute. I'm pretty sure on a 5 minute it would work even better. Like right here, right? I'm using my indicator, which is the WMA. This is a weighted moving average. This is the setup. If you guys are new, let me show you that right quick. This is the setup I'm using. Just 3 lines. It usually comes with a lot of lines, but you only need these 3. And I'm using the 12th, the 30th, and the 100. Okay. So The 12 is the blue line right here. Blue line is the 12. The 30th is the red line, and the purple is the 100. So if I was able to get in, for example, could be this one, it could be this one. Let's say I got in, you see the price broke above and did a retest. Most likely we were not in the time. Let's see. Yeah, I was opening the market. So let's say you entered there. Boom, you got your entry there, stop loss below. Now look at the lines. If you were to go just with price action, no indicators at all. If you want to go safely, you should be aiming at least for 1 to 2. Okay, 1 to 2 risk to reward. Now, if you open your indicator, you can hold it for a little longer because look, follow the blue line, which is the 12 and the 30. Look where, when they are getting separated like that, you don't even need to, you don't care. You just follow the trend. You don't need to be scared or anything. You know, when they are separated this way, they know the price is pushing up. The only way you may be getting out is when they start to cross over. When they cross over, boom, you get out here. That's your signal. So that's why this indicator, I pretty much, I found that out. And for me, that it helps me to take the best, to take advantage of the trend and take the most pips out of that trend, right? Instead of just going 1 to 2, I was so mad every time I was aiming for 1 to 2 and the trend kept going up and up and up. And I was like, oh, shoot, I should have held it. Then how can I know if the price will keep going? Like, what is going to give me the confidence to keep holding the entry? Okay, because sometimes I happen to hold it and then the price, it dropped immediately and I was like, damn. So this helped me and it will help you guys as well. Very good tip for this indicator. It is gold. Right here as well. Look, if you would have aimed, well, in this case, it was a little different. You see, maybe you right here. Oh yeah, it's pretty much the same. So you see 1 to 2 risk to reward right there. Anyways, you would have get out by the time they cross over right there. Okay, the price get pushing up, pushing up, pushing up, pushing up. Then they start coming down, and they start when they cross. It looks like they crossed right here. Anyway, so you would have made the still 1 to 2 risk to reward there. So that's pretty much it. I mean, with the following the price action and how I analyzed the market, at least with gold. If you go on a different pair, if you go on a currency, that's going to be as well. It depends on where you're standing, of course, what you're going to see. I tend to use the TP strategy on pairs. I tend to use the TP strategy. If you're seeing this type of butterflies right there, it's because I'm testing something. But there are always also trends. You're going to find a lot of trends. So whenever, let's suppose, let me try to go a little bit back here and try to find some trends. Of course, like I mentioned, I'm on a 15-minute. If I go with a 5-minute, you can always, in any time frame, you can find trends. Doesn't matter. Like right here on a 5-minute. Besides the actual pattern, let's say I don't have any type of pattern right there. Let's say you're just following the TP strategy, which is my TP strategy is based on breakout of structures, okay? Breakout of trend lines. And what I usually do is, if I'm following a trend line, look at the indicator as well. I know that by just by price action, let's say I go like this, I usually clone my line, put it like this, okay, because it's an area that helps me prevent fake outs. So what happened? Just by price action, let me delete this. Just by price action, but right here by price action, the price was breaking my structure, so it was telling me to sell right here. Okay, the price was already telling me to sell. It was a little slow, a little consolidation, but still the price action was telling me to sell. Now, another indicator I use is the RSI. RSI, whenever the price is below the 50%, I draw a line on a 50% on the RSI. So whenever the price is coming below the 50%, I know we're looking for sells. If the price is above, we're looking for buys. Usually it's a trend, an uptrend. And then when the price is below, it's a downtrend. Okay? So the RSI is telling me a signal, is telling me, okay, go ahead and sell. The price action is telling me, okay, looks like we're breaking now below. So my rules tells that when the price breaks my structure, I'm going for a sell or a buy, depends, of course, on the direction, right? In this case, is aiming for sell. So price action, second confirmation after the RSI, we got two confirmation. Now, if I open my indicator, what do you see here? Usually, this indicator works this way. When the blue, which is the 12 is above the 30th, we're looking for buys, and of course, the 100 is also below, right? It's stronger. The trend is stronger, right? And when they cross over like here, look, the price now is starting to come down, and now the blue line is below the 30th, and even the 100 is also above. So it's stronger, right? So basically, everything, the RSI, this indicator is telling me also to sell. The price action is also telling me to sell. Now, another thing that I use as part of the TP strategy is the Ichimoku cloud. I open the Ichimoku cloud, and let's see, the price is starting to come below the cloud. Usually this is how we do. When the price, the cloud is below the price is above, like in this zone, we're looking for buys. And when the cloud turns red and is above the price, we're looking for sales. Right? Anyways, the price was a little consolidation here, trying to scare you out, but at the end of the day, it ended up dropping. So this is where I perfected. This is my interest, and you guys should know, if you're old in this channel, you know about my TP strategy, and that's why I perfected it. And I love this strategy I created, and I'm sharing it with you guys. So that's basically it. Okay, this strategy could work with anything. You can try it with anything. And it's emphasizing price structure. Okay, it's based on price structure and the breakout of the structure. Because I'm a breakout trader, I love to trade breakout of trends or structures. Okay, so my indicators that I use are based on that. They are perfect. They are tweaked. They are pretty much created to detect breakouts. Alrighty. If you guys want to know about the TP strategy, I recommend you watching a couple of videos before this one. I have a TP strategy also and the diamond strategy. And so let's see. Let's continue answering some questions right here. Risk management was free. Okay. So one of the questions right here, well, I almost answered it. Like I do my risk management like this way. Like for example, whenever I do a final breakout right here, you see the breakout, I tend to put my stop loss above the last high. Take profit, I could either aim to the last low, or I could follow with the indicator. I could follow like that. I could follow, if you want to go maybe on a 1 minute as well, you can follow just the line. And when they crossed over, you can get out. Right here, maybe it started to cross over started to return the price, and boom, you can get out right there. So this indicator is very good to tell you when to get out and to take the most out of the drop or your trend line. Okay, so the question, and what do I aim? Like, what's my percentage to gain per month? So usually in my strategies, whenever I trade, I tend to aim for between $80 to $100 a day. Okay, that's my target. My daily target could be from $80 to $100, and I'm good. I'm out. I'm not looking to stay in the market for a longer time, being more greedy and looking to aim for 500, 600. Not at the moment, not. okay? Because I'm just like you. At the moment, I am just like you guys. I am not rich. I don't have millions. I don't have Lamborghinis and none of that yet. I'm pretty sure that will become in time, okay? But I'm perfecting everything that I'm doing. I'm sharing this with you that I'm doing because it's working for me, and I'm very like accurate, with my entries. Um, Within this time, with this year and a half, a little bit over a year and a half that I've been trading. And like I mentioned, I don't over leverage. I'm happy whenever I see $80 to $90, $100. I see, for example, whenever I'm trading the Nasdaq and I'm seeing my profits coming up to $100 already, I closed it because that's my target. You have to set your target as well. Try not to be greedy. Try to grow your account, and it will come in time. I mean, come on. I'm pretty sure that at some point I don't know, maybe in a couple of months, it will be a year. Nowadays, thanks to this, I'm able to help my family, to help my mom, and just, going through a difficult situation at the moment. So I'm able to help my family, which is what I want. And it's still, even though I need the money, I would do it. I could do it. I could over leverage to double or triple my account, but I don't want to do it because my experience says that if you get greedy with the market, it's gonna take you out, man. It is gonna take you out. So I'd rather make $100 at the moment, for the moment, right? While I'm growing my account, I'm rather make $80, $100 a day, which is $500 a week, $2,000 a monthly. I'd rather do that and not, just thinking, oh, I'm the best in the world and I'm gonna double or triple my account right away. I want to get rich, and no, I want to be healthy. I want to be wealthy. Of course, I do want. Like who doesn't? But that will come. What I know and what I understand, that will come with time. I'm just like you guys at the moment. I'm starting. I'm starting. I started to be profitable about a couple of months ago. I'm just like you. Okay. Are so many people that is also asking me, or they're maybe hating that I'm sharing this information for free with you guys. They don't want me to share this. They want me to pretty much, hey, you should charge for this. Hey, you should sell courses. I don't want to sell courses. I want to do my thing. I just want to do my thing. And because there are so many people asking, for mentorships and all that, I'm starting to consider to open a mentorship, but still, I don't feel comfortable by doing that. It's just, of course, it's time. It takes time. If I want to do a mentorship, it's going to take some time of me, like, if I want to spend time with my family, I won't be able to spend more time with my family because I will be maybe mentoring and all that. So it's basically a job. Okay. And I'm thinking about it. I think I will do it. If I do it, I won't be charging maybe that much, it would be maybe $30 maximum if I start doing that, because people are asking me. If you guys don't ask, I won't do anything. But people keep literally begging me to do mentorships, and I want to help you, but it's time. So maybe it will come. I'm pretty sure it will come. And I'm starting to consider all that, and mentorships will be coming maybe soon. I won't be charging anything crazy because that's what I hate. That's what I don't want to become. I don't want to become, those guys who charge a lot or charge crazy amounts and still people are not learning at all. So I don't want to do that. Anyways, I think I went over the top right there. So, okay. Let's see on which time frame you draw your support and resistance to trade on in 5. Okay. So to answer that, it's by price action. You have to know where you're standing, right? It doesn't matter what you are. If you are on a currency, if you are on the Nasdaq, on gold, whatever, usually you draw your lines on bigger time frames to know that's a very strong, that there is a very strong support right there or resistance, okay? So I usually go 4 hours or 1 day if you want, a daily time frame. But 4 hours for me is enough, at least on the Nasdaq and US 30 or US 500. It's pretty much enough to me. Okay, like for example, right here, where are the main like strongest points of touches? Like right here, the price started to consolidate. It touched, it broke below, and then it touched it again, had a reaction, drop down. So now here below is also creating another line, another support. So that's what I do, usually on a 4 hour, okay? And then when I go in, when I zoom in on a 1 hour, I already know that this line right here, this zone, white zone right here, this is very strong. So I'm within this zone right here. I know this is very, very strong. And if it happens to break it on a 1 hour, 30 minute, if it happens to break this, I'm definitely looking for buys at that point. I will be looking for buys. You can see this. Oh my God. This was on Friday, NFP. That's why this is one of my favorite days. It was beautiful, beautiful entry right there. And so that's pretty much how I draw my supports and resistance, usually on a 4 hour to maybe a daily time frame as well. You can do it and you can draw your lines. Now, you know that, for example, on Nasdaq, US 30, US 500, you know that they are always pushing up. You know, the markets are always like on an uptrend pushing up all the time. Okay, these massive drops sometimes are just corrections. These are pullbacks. You know, after a couple of days, after 28 days or so, or a month, the price will do pullback. Of course, this huge pullback right here, it depends. It could be news. It could be, in this case, the pandemic. This was the coronavirus when everything was affected, you know, started dropping, and then corrections and then drop, you know, overbought. The markets are overbought for a moment, then they make a correction, or they're also a news. Sometimes they're coming out. But you know already, I don't usually watch the market, for example, on a daily, is to maybe to know where I'm standing. Maybe I took a quick peek, like for example, right here, there's a big engulfing candle. So this means that the price could be pushing up. Plus, if I, for example, if I use my Fibonacci, I know that from this low right here to this last high, which was this one right here, not this one, but this one, the price did came back and barely touched the 38.20. So this already count as a pullback, right? The price was already pushing up, pushing up, pushing up. Consolidation is telling you, this is telling you something. The price from here to here, it didn't do a pullback in this zone. So it has to do a pullback at some point. This was the pullback. And now, boom, engulfing candle. These are your entries, guys. If you're looking, for example, on a daily time frame, let's suppose you are, I don't know, you are not a scalper. Let's suppose you are a swing trader. So you can make your entry easily right there. Stop loss below the last low, and you can aim 1-to-1. You can aim to here. That's a lot of pips. That's 2,296, I would say. Yeah, 296 pips right there. But this is if you are a swing trader. You know, it's gonna take a couple of days, even weeks, you know, to reach this point right here. All right, or you know, it depends on the volatility. It could reach it maybe in 1 day, but it depends. So this is a good point of entry if you think about it on a swing. If you're a swing trader, that could work. I mean, this is a good signal. You know, push, pull back, and now you got the engulfing. This is a signal. This is what is called a trigger, and a pattern, a candle pattern. So this is beautiful to make an entry right here. You put your stop loss below the last low, and then you aim, you know, for highs. So that's a good tip right there. And but I think so. Anyways, I think I went over as well to that question. So let's see. When someone speaks in a particular country, yes, of course, it depends on what you're trading. Let's say you're trading, I don't know, Aussie, odd NZD, If the president of Australia talks and says something and, you know, it gets affected, it may affect the currency, of course. Yes, that actually could happen. It could happen with currencies. And especially with Nasdaq, US 30 and US 500, if a president from Australia speaks, I don't think it's going to be affected because it has nothing to do with America, with the United States. Of course, if there's something like, I don't know, what can I say? Well, there's got to be maybe something that related to market, or let's say, I don't know, to commerce, or, you know, it's impacting something with the food or with traveling, you know, it depends. It may affect some of this, but usually don't, you know, usually affects the currencies. And they have their own, I would say, their own index. I think in Europe, they have like the UK 100, you know, they have their own index. So whenever something happens in the UK, it may affect the UK 100, but not the Nasdaq or the US 30. Okay, so it's more of a region or section. So it depends on of course, where you're located. Okay, so this one, Nasdaq, US 30 and gold, what we can expect. Okay, so what we can expect, and well, I already showed you here. If you're looking on a daily time frame, on a long time frame, this is a good entry from the push. This is the pullback. It completed the pullback. Now it's pushing up. So it looks like if you want to wait for Monday to see a confirmation of the breakout of this very strong resistance right here, you can then look for buys and be aiming these highs right here. Okay, this is what I'm expecting. I think personally, Nasdaq will keep pushing up now for next week. I think it will keep pushing up unless, yeah, I definitely think it will keep pushing up for the Nasdaq. I would say the same for the US 30. Right there as well. Beautiful. This was beautiful. I mean, look, this we were using in this case the news for the at 7:30 right here. If I stand up right here in this candle, you see 7:30 a.m. 7:30 a.m. right here in Colombia. This is when the news came out. Okay, the NFP. So immediately, what do you see? It's a flag pattern. Whenever I told you guys these flag patterns, they tend to be respected a lot on the index. Okay, these type of patterns, they tend to be disrespected more in currencies. So they are more. That's why I love index, because, you know, they tend to respect more things. You know, supports areas, they tend to respect more. And you know, as soon as the market, you know, the NFP came out, boom, pushing up. I made my entry right there. Stop loss usually below that last low, and then you go with the flow. You know, you can aiming. I was aiming for this. Of course, I'm already out. I didn't hold it, but I was happy already. You know, with what I did here, and the entry was beautiful. So what I'm expecting for Monday, we'll look at it on a 15-minute. The price could definitely still be pushing up, or it could do a pullback now at the moment. Let me go on a 1 hour. It could maybe do a pullback. If you look at it this way, it could definitely do a pullback, you know, from this push right here. So from the low to the high, you see the 38 is right here at this zone. So I'm pretty sure the price may do something like this. We'll do this, and then to continue pushing up. This is what I expect from the US 30. And then, of course, we'll be aiming for this last high. This is the highest point ever. So we'll be looking for highs, definitely. Remember, after a big push up, there's got to be a pullback. Always. Like you always see, you see this big push and pullback to do a retest, and then keep pushing up, and then creating some type of flag pattern right here. So it's basically the same, man. Same. So let's see. And you got push, pullback, push, and then it came back, of course, in our consolidation, ugly consolidation right there. This breakout was on Thursday, I think it was. Yeah, Thursday. So it's always creating patterns. You see patterns every day. Every day, every single time you see a pattern, you see patterns everywhere. All right. Let's see. And when the price is actually dropping, like here, you see patterns like this. Some type of triangle pattern right there. So here you see the difference that when the price is pushing down, it creates these patterns right there. When the price is pushing up, it creates this pattern. So basically like this. Let's see, like that, which is this one. This is a bearish pattern, right? Bearish pattern. And the inverse is this one. So you see a push and then pullback is coming this way. And then boom. So you got that pattern right there, right? So bearish, bullish, okay? It would happen all the time. Also, these type of consolidations in triangle as well. You just gotta wait. When you see a consolidation like this, just wait. Wherever the price breaks, wherever the price is breaking, the price will tell you where to go. If it breaks above, then you go with a buy. If it breaks below, then you go with a sell. Okay, don't get it complicated. A lot of patterns every day, everywhere. So anyways, this is what I expect for the US30. For gold, I hope, and I, based on my analysis, I think the price will keep pushing up now. Okay, beautiful thing here. If I go on a 15-minute, you can see this nice. Also, again, it repeated the head and shoulder. It happens a lot, like I mentioned on gold. Beautiful. Don't mind these triangles that I have here. It's something like I mentioned that I'm testing. So right here, beautiful entry. I told you guys on Friday the price might be pushing up by the time the news came out, and it did push up. So what is it doing? What is the price doing? You already see what the price is doing. You see my structure right there. You see there's a resistance. The price broke above, came back for a little retest. Might be consolidating in this zone, in this area, right? It might be even be dropping a little bit more to do or to complete. Maybe, let's see, to touch this 38. I'm pretty sure the price is going to do this. It's going to mess up maybe on Monday, something like that. And at some point, one candle will drop to touch the 38.20 before pushing up. Okay, I think that's what it's going to do. It will consolidate, but like I mentioned, after this big push, because of the news, it needs to do a pullback. It needs to do a pullback. I'm pretty sure at least one little week will barely touch the 38.20 to actually continue pushing up. That's what I expect for gold. And like I mentioned, I do have a couple of entries there on gold, and I'm aiming for the last high, which is very like this, like here. Let me go back on a daily. Remember that double top? On this double top, that's where I'm aiming at the moment. So yes, I'm expecting gold to continue up. Hopefully, we'll continue up. Let's see. Anyways, let's see how it goes next week. But I definitely think that it will keep pushing up at the moment. Next question. Types of patterns flag, which is, well, I think I already explained that type of patterns that are basically out there. Most of them, like the most commons, like you see the flag patterns that I already showed you here in the Nasdaq. You got the consolidation patterns. In fact, oh no, I deleted that. But yeah, so consolidation patterns, flag patterns. Let me show you. So these type of patterns, so this is pattern. It happens all the time. The head and shoulders happens all the time. Let me show you one pattern that also happens. Whenever the price is exhausting, for example, could be in a big push up. It's kind of like this. Let me draw it to you. Let me draw it to you. I don't want to leave you with this question hanging. So it's usually like this. And then boom. This is a reversal pattern. And when you see this pattern forming on a structure that there was a previous high, oh, very good example I want to show you. I think it happened with the USD CAD. Let me show you here. Yeah, there you go. Beautiful. That's the pattern I'm talking about. When you see the pattern forming on a consolidation, this is telling you. There was also here. It was also almost the same pattern right here. There was some type of. You see the big push. You see the big movement. 1 second. I'm sure. Okay. So there was some type of consolidation there. All right. So when you see this and it's touching that you know there's a big resistance right here, right? And you see the price is touching right there, then you know that there is a very high probability the price breaking down, you're going to go for a sell. So usually whenever you see a pattern like this, usually it's a reversal, okay? The price is exhausting, so it doesn't have any more strength. So it's losing power basically. And then at some point after maybe reaching the roof right here, this structure, it will then drop. And our job is to find an entry, like I mentioned, or right here. You can sometimes, when you see these type of patterns, you can sometimes maybe do sell stops. You can do a sell stop right here at some point in this area and to put the stop loss above. It could be above this high or above the structure because the price sometimes could get a little higher, maybe above this last high. So it depends, like I mentioned. And you can aim either to this point, okay, because you know it's on a big consolidation. So you can either aim to this point or 1 to 2 risk to reward. That could happen as well. Or in the middle, or you can do maybe when the price reached half of your profit, you should be closing most of it and leaving maybe one open if you want, and move the stop loss to break even and let it run and see how it goes. That's what I usually do with this type of pattern. So you got this one, like I mentioned, this pattern, plus all the ones that I showed you on gold, which are the most common patterns, and the head and shoulder. It happens a lot. Let's continue, guys. Let's see. More questions are coming in now. Analysis for each and every day. Well, I will have to show you that on a live. I usually share with you this live every day on my Telegram group. It is possible to withdraw straight after profits. That's a very good question, and that depends on your broker. I don't think that's possible. But if some of you guys know, if there's a broker out there that you can withdraw your money, and as soon as you take your profits, that'll be awesome. Like, I'm pretty sure you can move it internally on your, let's say on your broker, you can move it internally. You can take it out of your trading account to your, maybe to your broker account, but to be immediately on your bank, I'm not sure if that's possible. I would like to know that. Definitely. Can you use the same strategy for both indices and currencies? Already answered that. What time frame draws support and resistance? Already answered that. Okay, asking the same question. How you support the Gartley and butterfly patterns? I think that I'm going to do that in a different video because I'm going to be extending for a long. These are very complicated patterns, to be honest, to find. And I usually I kind of like playing to find this type of patterns because they're complicated to find. However, I use a certain rule to me that works. Let me, for example, let me go on the euro odd right here, like right here. You could see a couple of patterns that are working. I also gave you this analysis on Friday. And I told you guys that the price maybe, at this point, it may be pushing up. What's my rule after finding a Garley or a butterfly pattern or shark pattern or a cipher pattern? There are a lot. And they're complicated, man. They're so complicated and confusing. Until I would say a month, I started to understand them maybe a little bit better, but they're very complicated to find. So my rule that I apply is whenever I see at least 3 touches, I tend to draw maybe a trend line, or it could be a support or resistance. And when I draw a trend line, I tend, I'm looking for at least 3 touches to give me confidence that this is a strong resistance, in this case, support, I'm sorry. And then if I happen to find a pattern, usually after a massive drop like that, I know that when there is a drop like that, there's got to be a pattern. There's a pattern forming right there. And what I'm going to do, and why I know, and what gives me the confidence that the price may be returning, pushing back, is because you see this big drop right here. Where's the pullback? Tell me, where's the pullback right here? There's none, right? There's no pullback. There's no pullback. To me, there's no pullback. Price kept pushing up very strongly, very violently until now, until here, until it touched my my zone, right? My third touch. So I know that the price, after a massive drop like that the price should be doing a pullback at least to the 38.20, and that's my advantage. So first, I know that the price should be doing a pullback. I'm not saying that it must do it, because like I mentioned, I don't control the market, but it should. If this thing keeps dropping the whole day, the whole year, everybody would be rich. And you have to have that in mind. The price, after a big pull, or after a big push, I'm sorry, there's got to be a pullback. And whenever I see this, and I happen to find out, whenever I see this drops like that, I'm just trying to look for a resistance or support. I draw my line. I see 3 touches. Okay, now I'm going to use the Fibonacci to detect like where is it, if it's actually a cipher pattern and where to take my profits and all that. It's kind of more complicated thing that I will maybe do in another video. But I usually, like I mentioned, I know that after a big pullback, after a big push, there's got to be a pullback, and I'm going to be taking profits most likely right here. I know this is going to push up. I don't know. I just know. And it did work right here. There was a resistance right here in this zone. I just find, big push. Look at this big push, no pullback at all, no pullback at all. And now, boom. So I start to draw and try to find a pattern. So this is where I found it, using the retracement, the Fibonacci retracement, and the normal Fibonacci. And boom, take profits. Also, another touch right here. The price came back violently. You see, no pullback at all, no pullback at all. Boom, and finally it starts pushing down. When the price starts pushing down, I know that I just take the risk, and I make my entry here. It's stop loss below, above the last high. The same thing above the last high, and right here in this zone, I have not entered yet. I'm programming. I'm putting a buy stop or buy order in this zone. I have not entered yet. So I put my stop loss below the last low, and then I aim either for the 38 or the 50. So that's a little quick example on how I do it. But definitely I would have to specify this in a different video, because that's a very big thing. Okay, there are a lot of things that are involved. Okay, let's see. What's the best strategy you're using day by day? The diamond. The diamond strategy is the best strategy I'm using at the moment. I still use the TP strategy whenever I see something else, something different somewhere else, or like I mentioned, the diamond strategy is specifically for 8:30 a.m. when the market opens. Okay, that's why it's my favorite, right? Because if I don't want to trade any other time during the day, I can just wait for 8:30 and I just trade that time and then I'm out. I'm not trading anywhere anytime during the day. Okay, just one single time. That's why it's my favorite. However, whenever I have some more time off and free, I can continue trading using the TP strategy in Nasdaq as well. Nasdaq or US 30 or US 100, or even trading gold. I like trading gold as well. And let's see, can you teach us how to use fundamentals analysis, those previous forecasts, and how to affect the market? Yeah, I think that question is also going to be for one single video. I'm going to have to do that particular question for one single video because that's a lot of information as well. What I can tell you, fundamentals is basically news, and they're more dangerous. To me, personally, they're more volatile and they're more risky because sometimes you can see something like this. Oh, like this, for example. Let's say, for example, you see some news and the price came back, started to come down, dropping massively. And let's say in a 5-minute time frame. 5-minute time frame, you see boom, 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 boom. And then in the next couple of minutes, in the next 5 minutes, you can see one single candle coming back up immediately. So by trading fundamentals, it's more adrenaline floating through your veins, I would say. It's more adrenaline. Okay. What I do like to trade is of course, the NFP, because the NFP is, that a lot of pips are moving, and still I usually aim for a maximum 100 pips. Like I don't like to still hold an account for long times. But fundamentals and the forecast and all that, they're very dangerous. And Joash Naidoo trades on fundamentals. That's why whenever you trade with him, you see that sometimes you may have massive drawdowns, and that's what I don't like. I don't have the balls, definitely. He has the balls to do that. And that's way too risky. To me, that's too much adrenaline. I got too nervous and I may be closing my entry. So I do use fundamentals maybe a little bit, but I'm scared. Like whenever I'm using them, I'm definitely scared to do it. So I would say for you guys, be careful as well with fundamentals. Just giving you an idea of what I think. Like I mentioned, just based on news could be very like shitty. Like whenever you're looking for and you're aiming, the price went up 80 pips, and then the next minute, boom, it will melt down. It will melt you down. If you put your stop loss right here, or you didn't even put a stop loss, it's gonna blow your account right quick. So that's why I don't like to trade only on fundamentals. I may use a little bit, or I may be aiming for like 50, 60 pips, and I'm out, or sometimes even less than that. But I don't like them 100%. That's what I can tell you. Okay, just be careful with that. So I think that would be all for today, guys. I hope I was able to answer a couple of questions. If you still have some more doubts, leave your comments below. Subscribe if you're new on the channel. Leave a big thumbs up. Will help me a lot. Thank you so much, guys, for the support. This channel is growing immensely. I appreciate definitely the love. Thank you so much, guys. I hope you can make a lot of pips, a lot of money with this. And I'll see you guys in the next episode. Have a wonderful day, guys. Take it easy.